See, once amalgamation will take place, or maybe absorption, or maybe external reconstruction, the selling company will get liquidated and it will be no longer in existence. So basically, we are supposed to close the books of the selling company. So what are the accounting entries that we have to record so that we can close the books of selling company? See, for a selling company, they cannot ask you to prepare balance sheet. As I said, selling company will get liquidated. It will be no longer in existence. If the company is not in existence, then how shall we prepare the balance sheet? So it is not possible to prepare the balance sheet of the selling company. So we have to simply discuss what will be the journal entries in the books of the selling firm so that we can close the books of the selling company. Just visualize for a moment the balance sheet of selling company. Okay, before the amalgamation or maybe absorption. It will have different assets over here, right? Sundry assets will be there. And on the liability side, you will have equity share capital, preference share capital, reserves and surplus. And then I'm saying here, there will be different liabilities. So sundry liabilities. So this is how the balance sheet of a selling company will look like. Now, as I said, we will have to close the books of the selling company. So how will I close the books of the selling company? I will close the books of selling company by opening a new account known as realization account. Okay, known as realization account. Just try to go through the scheme of accounting entries. The first thing, assets taken over. Okay, assets taken over by purchasing company. We should transfer it to this new account, which is realization account. So the assets which are taken over by the by the purchasing company, I will transfer it to the realization account. Think for a moment, what will be your accounting entry over here? What will be your accounting entry over here? Assets are having a debit balance. I have to now close the assets and transfer it to the realization. Assets have a debit balance. So to close the account, I'll have to credit it. So my accounting entry will be realization account debit to sundry assets account, right? The different assets which are taken over. Okay, you will record this accounting entry at book value. So what will happen is the assets of the selling company are taken care of. So the asset side has become empty. Just as the assets, liabilities taken over will be also transferred to realization. So liabilities taken over by purchasing company. This also I will transfer to realization account. Liabilities will be transferred to the realization account. Ask yourself, what shall be the accounting entry to transfer away the liabilities? Tell me, what will be the accounting entry? Liabilities have a credit balance. So if you want to close the liabilities, you will have to debit them. So my accounting entry will be the different liabilities which are there, debit to realization account. Remember one thing, all the accounting entries in the books of the selling company will be at book value. Everything will be at book value. I have to simply close the books of the selling company. So what has happened? The sundry liabilities also taken care of, right? Now, since you are transferring away the assets and the liabilities, in return, we will get money from the purchasing company. So my third accounting entry will be for purchase consideration, right? Purchase consideration due. So tell me, what can be the accounting entry for the purchase consideration due? This purchase consideration is due from the purchasing company, right? So purchasing company is becoming a debtor for us. So our accounting entry will be purchasing company account debit, purchasing company account debit to realization account. There is nothing like purchase consideration account. Okay, so you are not going to open any purchase consideration account. It is simply purchasing company account debit. Why purchasing company account debit? Because we have to collect that much of money. So for us, purchasing company is becoming a debtor. So purchasing company account debit, and this money is due for the realization. So realization account will be credited. My next accounting entry will be for the settlement of the purchase consideration. So your fourth accounting entry, it is for settlement of purchase consideration. Settlement of purchase consideration. See, the purchase consideration will be settled in form of cash. So cash or bank, whatever you are getting, we will debit that. You may get preference shares in purchasing company account, debit that. You may get equity shares in purchasing company, debit that, right? To purchasing company account. Earlier we had debited the purchasing company, but now purchasing company is giving us cash or maybe preference shares or maybe equity shares or any other combination. Purchasing company is making the payment, isn't it? So that is the reason we are crediting the giver. It is the settlement of the purchase consideration from it is the settlement of purchase consideration from the purchasing company. Great. Written back to the balance sheet now. Written back to the balance sheet. We now have over here preference share capital. The money towards preference share capital is due to the preference shareholders. Okay. So we will now close preference share capital account. Okay. How will I close the preference share capital account? The money that is relating to the preference share capital, it is due to the preference shareholders, right? It is due to the preference shareholders. So that is the reason my accounting entry, preference share capital has a credit balance. So preference share capital account debit to preference shareholders account. Okay, this will be my accounting entry. Preference share capital has a credit balance. I want to close it, so I debit it, and this money is due to preference shareholders, so transfer it to preference shareholders. Return back to the balance sheet now. Preference share capital also taken care of. Now I am left with equity share capital and reserves and surplus. All this money belongs to the equity shareholders. Yes. So that will be my sixth accounting entry. This is close equity share capital and reserves and surplus. As I said, all this money belongs to the equity shareholders. So equity share capital account debit, reserves and surplus account debit to equity shareholders account. Okay, so this is how I'll make the payment. This is how I will show the amount which is due to the equity shareholders. So if you return back to the balance sheet once again, just see the balance sheet once again, equity share capital taken care of, reserves and surplus taken care of, everything which is there in the balance sheet taken care of. Every account in the balance sheet has been closed, right? So we have taken care of the balance sheet. Great. Now, there are certain new accounts that you have opened. We have to now settle those accounts. Think for a moment. Which are the new accounts that you have opened? You have opened a new account, which is realization account. You have opened a new account, preference shareholders account. And you have opened a new account, which is equity shareholders account. So now these accounts are required to be closed. The moment you will close these three accounts, all the accounts in the books of the selling company are closed. We can say it is the end of the existence of the selling company. Okay. We will start first with preference shareholders account. Okay. Sorry. So we say as our seventh accounting entry, close preference shareholders account. Right? We will close the preference shareholders account. Most of the times to preference shareholders, we will be giving them preference shares in, the purchasing company. So we will say preference shareholders account debit to preference shares in purchasing company account. Okay, so preference shareholders account will be debited to preference shares in purchasing company account. Now it is quite possible that the amounts of these two accounts are different. For example, preference shareholders is 10 lakhs, but the value of the preference shares in the new company is 11 lakhs. So you are paying 1 lakh extra. This 1 lakh extra that you are paying, you will debit it to the realization account. Right? Anything extra that you are paying to the preference shareholders is at an expense to the equity shareholders. Say equity shareholders are losing out. If you give more money to the preference shareholders, it is the equity shareholders which are at a loss. So realization account will be debited by 1 lakh rupees. Okay. It is also possible that preference shareholders is 10 lakhs, but the preference shares which we are giving to them is only 9 lakhs of rupees. Then this time, whatever difference is there, we will credit it to realization. So we'll say to realization account, right? Realization account 1 lakh. If you are giving less to the preference shareholders, then equity shareholders are gaining. The gain to the equity shareholders will be first credited to realization account. Right? If both the amounts are same, then really nice. We don't have to do anything. So remember this, close the preference shareholders account, and whatever difference is there when you are closing the preference shareholders account, that difference should be debited or credited to the realization account. Okay. Now, eighth accounting entry. You should now close realization. Close the realization account. Okay. Whatever balance is there in realization account, transfer it to equity shareholders. If there is a gain, then realization account debit to equity shareholders account. Okay. If there is a loss, equity shareholders account debit to realization account. This is how we will close the realization account. So you should just go through your entire journal, or if you are preparing a ledger, then you will get the balance in the realization. If the realization has a gain, that means it has a credit balance. If there is a gain, there is a credit balance. So to close it, I'll have to debit it. So realization account debit, and this gain belongs to the equity shareholders. So credit equity shareholders, right? In case if there is a loss, then realization has a debit balance. So to close it, you will have to credit it. So equity shareholders account debit to realization account. Finally, the last accounting entry, you will settle equity shareholders. The accounting entry, yes, the accounting entry for this shall be equity shareholders account debit. If you have to give cash to them, then cash and bank account credited. And you may have to give equity shares in purchasing company account. Okay, these are the final payment that we'll be making. See, when the purchase consideration is getting settled, All this you are receiving from the purchasing company. So we are now giving this to the equity shareholders. This preference shares, we have given it to the preference shareholders. This equity shares, we are giving to the equity shareholders. So whatever we had received from the purchasing company, we are distributing it to the preference shareholders and the equity shareholders. So finally, what has happened? Yes, finally, what has happened? Realization account is now closed, preference shareholders account is closed, and the equity shareholders account is also closed. All the open accounts are closed. We have closed the books of the selling company. Quickly, I'll walk you through the accounting entries. Whatever assets are there in the whatever assets are there in the selling company, transfer it to the realization, the ones which are taken over by the purchasing company, transfer to realization at book value, realization account debit to sundry assets account, liabilities taken over by purchasing company, transfer to realization, liabilities account debit to realization account, purchase consideration due, there is nothing like purchase consideration account, so don't open it. Consideration is due from the purchasing company for realization. So purchasing company account debit to realization. Settlement of purchase consideration. Purchasing company will settle the purchase consideration by giving you cash or maybe shares. So whatever you are receiving, debit that. You are receiving it from the purchasing company, so credit the giver. Close the preference share capital. This money is due to preference shareholders. Close equity share capital and reserves in surplus. This money is due to the equity shareholders. Close the preference shareholders account, or we can say settle preference shareholders. So preference shareholders account debit to whatever we are giving to them. If there is any balancing amount in this accounting entry, transfer it to realization. Finally, close the realization. Whatever gain or losses there, it belongs to the equity shareholders. So transfer it to the equity shareholders. And finally, I will settle the equity shareholders. Equity shareholders account will be debited. Debit the receiver, right? So we are giving this to the equity shareholders. So debit it. Whatever you are giving to them, credit it. This will close the books of the selling company. Selling company is now liquidated. It is now no longer in existence.